All right, welcome back to the Deep Dive. You shared a bunch of interesting articles with us this week, and we're going to pull out the key insights on some of the big tech and business stories making the rounds.
Yeah.
Think of this as your kind of cheat sheet to staying informed, maybe with a few surprising twists along the way. Our mission, make sense of it all for you.
Exactly. We've got a really dynamic set of topics today, looking at how, global trade winds might shift and what that means for tech, the ongoing saga of a certain influential entrepreneur, the seemingly limitless demand for the brains behind AI, the role of big money in funding innovation, and even a venture into crypto by a well-known family. It should be a fascinating journey.
Okay, so let's jump right into this talk about potential tariffs. President Trump has been mentioning these reciprocal tariffs, right? And it's still a bit fuzzy on the details, like when they might happen, which countries could be in the crosshairs, and if there will be any exemptions.
Yeah, exactly.
It's like trying to predict the weather months in advance almost.
Precisely. The lack of specifics creates a lot of uncertainty, which is, a factor in itself. Beyond just broad tariffs, there's been specific chatter about potential tariffs on semiconductors and pharmaceuticals down the line.
Right.
What's interesting to consider is how trade policy can become intertwined with other seemingly separate issues. Take the TikTok situation, for instance.
Oh, yeah.
The possibility of a U.S. company buying it seems to be floating as a potential way to maybe influence future tariff rates. It's all connected, in this global landscape.
It really is. And it's not like other countries are just sitting still. China, for example, has apparently been preparing for potential tariffs for quite some time. We're hearing about companies that are employing strategies like offshoring, moving production elsewhere, friendshoring, shifting to friendlier nations, and nearshoring, bringing manufacturing closer to home. They're clearly thinking ahead.
Absolutely. And we're even seeing some of that preparedness reflected in market performance. The Chinese market has actually shown stronger performance than the U.S. market this year.
Huh, interesting.
Yeah, two potential drivers for this could be the significant buzz and investment around generative AI within China, and maybe a general reassessment of companies that might have been previously undervalued. It suggests that adapting to potential trade shifts can have, tangible market effects.
That's a great point. Now, on the flip side, there's an argument brewing that these potential Trump tariffs might actually spark a new wave of innovation here in the U.S. The idea is that with less red tape and a push to bring supply chains back home or to friendly nations, especially for critical sectors like automotive, robotics, and those all-important rare earth materials, we could see a real boom in domestic ingenuity. What do you make of that?
It's a compelling theory, and it certainly aligns with the idea of building more resilient and secure domestic supply chains. The initial disruption of adjusting to new tariffs could be offset in the long run by greater self-reliance in key industries. However, it's crucial to also consider the potential impact on global companies that have built these intricate international networks.
Which brings us to the chip makers, right? NVIDIA has been riding so high, but there's this nagging concern that geopolitical tensions and these chip export bans aimed at preventing the transfer of cutting-edge tech to China could put a lid on their future growth by limiting access to a massive market. It feels like a real tightrope walk.
It is, yeah. The push to maintain technological superiority and address national security concerns has direct consequences in a globally interconnected market. Companies like NVIDIA have thrived on international demand, and any restrictions, while maybe intended to foster domestic innovation and security in the long term, will inevitably create headwinds and require, strategic adjustments.
Okay, let's switch gears and talk about someone who always seems to be in the middle of a tech conversation, Elon Musk. It's almost like his tweets and public statements are now a factor in Tesla's stock price.
Oh, definitely.
We've seen some recent dips, and analysts are suggesting that the company is becoming increasingly linked to the political reactions surrounding Musk himself. It's a wild dynamic.
It's a really significant development. We're even seeing reports indicating a decline in Tesla sales in Europe that are directly being attributed to Musk's more outspoken political views. It appears his personal brand is now having a measurable impact on consumer choices, at least in certain regions.
And it's such a contrast to his earlier image, isn't it? He was the visionary, the disruptor. Now, the narrative seems to be shifting towards cost cutter. And I even saw one description calling him a vehicle of trolling austerity. It made you wonder if he can ever recapture that original magic around Tesla. What do you think?
That's the million-dollar question, right? Rebuilding a brand image, especially when it's so closely tied to a polarizing figure, is a considerable challenge. However, we're also seeing the emergence of a potentially new segment of buyers who might actually be drawn to Musk's current persona.
Really?
Yeah, these buyers might be less motivated by traditional environmental concerns and more aligned with his more recent viewpoints. It's an interesting, albeit perhaps unintended, market segmentation.
That's a fascinating point, almost like he's accidentally created a new niche market.
Yeah.
But then you look at the Cybertruck, it feels less like a serious contender in the pickup truck market and more like, well, a very expensive statement piece for a certain segment.
Yeah.
The actual sales numbers haven't exactly been earth-shattering.
Its positioning is definitely unconventional. It's tapping into a specific cultural and perhaps even political moment. But it faces significant hurdles in competing head-to-head with established players in the very competitive pickup truck segment on factors like practicality, price, and, traditional design expectations.
Now, staying within the Musk universe, X, formerly Twitter, recently bought an AI startup in a deal involving stock. At first glance, it sounds like a strategic move to bolster their AI capabilities, but some experts are raising eyebrows. Why the skepticism?
Well, the immediate perception seems to be that this deal benefits X-shareholders significantly, given the challenges X has faced, including advertisers potentially pulling back and a reported drop in overall valuation.
Right.
Suddenly having a stake in a potentially high-growth AI venture looks very attractive. It's almost like injecting some fresh energy into the company's narrative.
Right. It's a bit of a rebrand through acquisition, maybe. But the core question seems to be, was it really necessary? X was already reportedly using its own data to train Grok, their AI model. So why acquire this startup, especially with rumors of a rather inflated valuation and without any new major funding to really justify XAI's reported, $80 billion price tag? It feels a bit circular.
That's the central point of contention. Strategically, access to data and distribution for Grok within the X platform makes logical sense. However, considering that Musk owns both entities, the existing infrastructure likely already facilitated data access. The significant valuation attributed to the acquired AI startup, particularly without a recent independent funding round to validate it, does raise questions about the mechanisms and transparency behind these internal valuations within Musk's private holdings.
It almost gives the impression that he has a lot of leeway in just deciding what his various companies are worth at any given moment.
There certainly appears to be a considerable degree of flexibility in these valuation assessments, particularly in the absence of strong external shareholder pressures. It highlights the inherent complexities and potential for opaqueness when valuing private technology companies, especially those under the control of a single dominant figure.
Okay, let's pivot to something that feels like it's only going to get bigger. Generative AI and the seemingly insatiable demand for computing power. Sam Altman himself has talked about biblical demand, especially with the advancements we're seeing in things like image generation. It sounds like we're just scratching the surface here.
That's the prevailing sentiment across the industry. Many publicly traded AI companies today have valuations that are heavily based on future growth projections. As the saying goes, they've got a lot of wood to chop to actually meet those lofty expectations.
Right.
But the potential for an exponential increase in the need for computational resources is undeniably present.
And it's not just about generating realistic-looking images, is it? The next frontier seems to be achieving perfect text rendering, which could pave the way for AI creating entire presentations, reports even a future where almost every single pixel you see on a screen is being dynamically rendered by a neural network. That's a staggering thought.
It is, and it really drives home just how much computational muscle will be required to power these advancements. Even OpenAI, with its already massive infrastructure, is reportedly facing server capacity constraints.
Wow.
That gives you a real sense of the sheer scale of the demand that's emerging.
Which naturally leads to the question of infrastructure readiness. We're seeing different strategies emerge, like Lambda focusing on providing compute resources to a wide array of developers and major cloud providers. Those are often referred to as hyperscalers, think companies like Amazon Web Services or Microsoft Azure, while CoreWeave has established a very close relationship specifically with OpenAI. It feels like a race to build out the necessary computing backbone.
It's definitely a global race, and it's not solely concentrated in the U.S. There's a strong likelihood of high-quality open-source AI models originating from China, and the collaborative nature of open-source development means that innovation in this space is inherently international, so we can expect competition and advancements to come from various corners of the globe.
So what are the more immediate implications of generative AI for how we work every day? Are we really on the cusp of a shift where tools like ChatGPT can just take a few bullet points and generate entire polished presentations for us, potentially making a lot of traditional software workflows obsolete?
That seems to be the trajectory. The idea of providing core talking points and having an AI seamlessly generate a professional presentation, a compelling sales pitch, or even significant portions of creative content like, I don't know, video games, is becoming increasingly viable.
Mhm.
This suggests a fundamental change in how we interact with technology and how content is created and consumed across various industries.
It's all evolving so rapidly. Let's touch briefly on venture capital. There's a viewpoint gaining traction that VC might be losing its focus on funding truly novel technologies, and instead is primarily chasing outsized financial returns, which could be misdirecting capital within the broader economy. What's the core of that argument?
The concept of the power law is central here. In venture capital, a very small percentage of investments, the so-called unicorns, tend to generate the vast majority of a fund's returns.
Right, the big winners.
Exactly. This dynamic can incentivize VCs to prioritize high-risk, high-reward investments with the potential for explosive growth, sometimes at the expense of overlooking companies with more modest but still substantial and sustainable growth prospects, what are often referred to as doubles and triples.
It's interesting to hear Sam Altman's perspective on this, suggesting that perhaps fundamental AI research might be better supported through government funding. His initial decision to structure OpenAI as a nonprofit seems to reflect a concern about the potential skewing of priorities when purely driven by investor returns.
It really brings up a crucial societal question. When groundbreaking technologies are primarily fueled by the need to generate significant returns for investors, are we always prioritizing the types of innovation that best serve the broader public good? Are the incentives naturally aligned?
So if we wanted to see a shift, how could those incentives be realigned? Government funding for basic research seems like one piece of the puzzle. What else could help?
Well, one approach is what's sometimes called government market crafting, where policies and incentives are put in place to encourage investment in sectors that might be overlooked by traditional VC but are deemed socially or strategically important. Another potential shift could come from the limited partners, the institutions and individuals who invest in VC funds, if they start to prioritize funds with more diversified investment strategies and return profiles beyond just chasing unicorns.
It's interesting that housing consistently comes up as a major area ripe for innovation, but often doesn't fit neatly into the typical VC model.
Mhm.
It makes sense when you think about it. It's capital intensive, heavily regulated,
Mhm.
and doesn't usually offer that rapid software-like growth trajectory that many VCs are looking for.
Exactly. The funding cycles and the nature of innovation in sectors like housing often require different approaches and longer time horizons than those that currently dominate the venture capital landscape. It necessitates a different way of assessing risk and potential returns.
All right, let's wrap things up with a bit of a surprising turn into the world of cryptocurrency. The Trump family has reportedly launched American Bitcoin, a joint venture focused on Bitcoin mining here in the U.S., and apparently Eric and Donald Trump Jr. are involved as investors. What do you make of this?
Well, it certainly aligns with President Trump's past campaign rhetoric about wanting all Bitcoin to be mined within the United States. However, the practical feasibility of achieving that, given Bitcoin's inherently decentralized and global nature, has always been a significant point of discussion and, frankly, skepticism within the crypto community.
Yeah, it definitely raised a few eyebrows. And speaking of crypto, while Bitcoin still grabs most of the headlines, what's the current state of play with Ethereum, the #2 cryptocurrency? It feels like it's facing some stiff competition these days.
Ethereum, despite its early innovation in enabling a wide range of applications beyond just a digital currency, things like NFTs and smart contracts, is indeed facing increased competition from different angles.
Uh-huh.
Bitcoin remains the go-to for many looking for pure cryptocurrency exposure due to its limited supply, its, perceived status as digital gold. And in the realm of decentralized finance, or DeFi, platforms like Solana are emerging as strong contenders, offering faster and often cheaper transaction speeds.
So while Ethereum really pioneered the idea of a blockchain that could do more than just trade its own coin, it's now navigating a more crowded and competitive landscape as the crypto world continues to mature and diversify.
Precisely. Innovation within the blockchain space is incredibly dynamic, and different platforms are constantly vying for dominance in various use cases and for investor attention. It's a fast-moving area.
Well, this has been a whirlwind tour through some really fascinating corners of the tech and business worlds. We've covered a lot today, from the potential impacts of tariffs on the tech sector and the ever-evolving story of Elon Musk's influence, to the incredible computing power needed for the AI revolution, the changing dynamics of venture capital, and even the Trump family's foray into Bitcoin mining. It really shows how interconnected everything is.
Absolutely. Political decisions have tangible effects on technology companies and global trade. Individual personalities can sway market sentiment. Technological breakthroughs create new demands and opportunities. And financial forces play a crucial role in shaping the direction of innovation. It all contributes to a complex and ever-shifting landscape that, you're navigating.
Exactly. It really makes you think about how all these different pieces fit together and what unexpected developments might be just around the corner.
Indeed. It's a lot to keep track of.
Thanks for diving deep with us today. Considering all the rapid advancements in AI and the potential shifts we're seeing in global trade and investment, what do you think will be the biggest unexpected technological or economic shift in the next few years? It's definitely something to ponder. Thanks for tuning in to The Deep Dive.